Okay. Welcome to another episode of Transform with Greg Carson, where we explore the transformation of markets and the people behind them. I'm your host, Greg Carson, and today we have an insightful conversation lined up with Jonathan Bier, a key figure in the world of emerging markets and innovative investments strategies, and a longtime friend of mine. Jonathan is a founder and CIO of Farside Investors, where he manages a fund that invests in listed equities, where the stocks either participate in crypto space or have potential to participate in this crypto space. In today's episodes, we'll be discussing the strategies behind investing in emerging technologies, the impact of digital assets and traditional portfolios, how to navigate the risks and opportunities, some of his backgrounds and his projects. And he will also share some insights on the future of financial markets and investors that need to know to stay ahead of the curve. So just a quick reminder is that the opinions and insights expressed on this podcast are opinions and insights personally, and do not reflect those of either Jonathan's company or Humla Ventures, the venture capital firm that I work with. So with that said, welcome, Jonathan. It's good to finally get you on here. We've been trying to do that for a couple months now, so I'm very happy to see you.
Yeah, thanks very much, and great to be here. Yeah, really appreciate it.
So I guess for those that don't know, Jonathan is the author of The Block Size War, a fantastic book that I read and to study the history of the crypto space. But he's also beyond that. I'm not sure people know that he's quite an adept investor, and he's been in the space for some time. So, Jonathan, why don't you just start by giving us a little bit of history of where you come from, how you ended up where you're at, and
Yeah, sure. So, yeah, I live in London in the UK. I studied mathematics at university in the UK at Warwick University, and I did a lot of modules on kind of cryptography, elliptical curves, and group theory. And I think I graduated in maybe 2007. So yeah, when Bitcoin came out, I was definitely interested in it from a kind of mathematical angle. I thought it was a very novel use of cryptography and a very novel use of kind of elliptical curves. I really loved the idea that you could have like an entire financial system built on just one curve. So that's kind of how I initially got interested. So then, yeah, my first job was at KPMG in London, where I became a chartered accountant. And after that, after I qualified as an accountant, I joined Ruffer Investment Management in 2012, where I was focusing on the Japanese market as a long-only, long-term, patient equity investor. And actually, Ruffer sort of 8 years after I joined, famously acquired a lot of Bitcoin, I think in 2020. And then I left Ruffer in 2015, went to Hong Kong, got another job, again as a kind of long-only investor into the Japanese stock market. But also in Hong Kong, I met the BitMEX co-founders, who at the time were just kind of starting BitMEX. And then I started kind of helping them out a bit, writing their blog as BitMEX Research. And the Block Size War, again, was also kind of kicking off at that time, and Hong Kong was a fantastic place to be to kind of witness that war, because a lot of the key players, yeah, I guess, were in Hong Kong.
Okay.
So yeah, I carried on then, and then in about 2018, I had this idea of a blockchain or crypto equity fund. So the idea is that you invest in listed stocks and shares, again, kind of long-only, diversified portfolio, but where the companies either had direct cryptocurrency exposure, or at that time, there wasn't really many listed companies with direct cryptocurrency exposure. So the idea was they could have cryptocurrency exposure if the crypto space grows. So companies with a unique technology, skill, asset, product that could be applied to the crypto space that isn't. And the idea was that kind of could give you asymmetric risk rewards. So, because the crypto space and Bitcoin is very volatile, it's a way of capturing some of that crypto upside whilst mitigating away the downside, because that potential crypto exposure wasn't necessarily apparent to other investors and therefore not reflected in their valuation ratios. So I
Mm-hmm.
eventually, left Hong Kong in 2018, started up a fund with this exact thesis. Um, did really, really well. I was doing it kind of working for a subsidiary of Brevin Howard in London. They eventually sold the fund in July 2021. So
Mm-hmm.
now I've launched a new company, Farside Investors, with a very similar idea. Again, equity fund that has some kind of pure play cryptocurrency stocks, but the bulk of the portfolio are kind of technology stocks or financial stocks that are not seen as crypto stocks.
Mm-hmm.
But because of kind of my deep involvement in the crypto space, I believe that they have, say, a technology or an asset or something that could be applied to the crypto space if the crypto prices go up.
Okay.
And I believe that that's, a way of generating a kind of an attractive portfolio for clients.
Great. So that ETF, so the Farside, so you did the first ETF, which was with Brevin Howard, and then they sold that, and that was called, what was that called?
So that first ETF, the ticker was BCHN. So Invesco
BCHN.
provided that product, and
Okay.
in the Brevin Howard subsidiary, I was managing it, and there was like a kind of joint venture between Invesco and the Brevin Howard subsidiary, Elwood Asset Management.
Oh,
Um,
okay.
and now, I've launched it's just a fund, so it's not an ETF that it has, it's just like an investment fund where you just have to contact us and subscribe, like a hedge fund or like even a
Right,
VC
right.
fund. So it's not a
So
listed
let's,
product.
so that ETF that you got, the Farside Fund, what is that? Like what stocks? Like what, for example, what kind of stocks do you hold in that ETF? If it's like, especially considering your insight that you're saying that there's stuff that could benefit or might be part of the crypto upswing, but it's not obvious. So what are some of the good examples of that?
Yeah, exactly. So the Farside product is not an ETF. It's a private fund or hedge fund
Yeah,
type
private.
structure. So there's various categories of these kind of not crypto stocks that could be crypto stocks. So there's a lot of kind of semiconductor companies in kind of Taiwan. Um,
Okay.
so they may be involved in something in the semiconductor supply chain. So maybe they produce chips. They could be a foundry. They could produce components for the production of the chips, or they could produce technology or help companies design chips. So the idea is that they could provide services to the Bitcoin mining ASIC manufacturers like
Hmm.
MicroBT or Bitmain. So, for example, they may supply them with capacitors, or they may build the kind of motherboard for the ASICs, or they may
Hmm.
even, provide a kind of library or computer system where the researchers or product development team at, say, Bitmain can use that product to design the chip or how it should be printed. So a lot of these stocks, they could be Taiwanese semiconductor stocks, and I may go to Taiwan, speak to the management team, speak to the R&D people, um, and sometimes they would, be quite dismissive of crypto or Bitcoin. They wouldn't agree that there is potential crypto exposure, but because I'm also speaking to the Bitcoin miners and the ASIC designers, I know what product features that they value. Um,
Hmm.
so, when I first launched the first kind of fund in 2018, we went to Taiwan, spoke to a lot of these Taiwanese companies. They're like, no, 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 Bitcoin's stupid. Of course, we're not going to supply services to the Bitcoin miners. I invested in the stocks anyway, patiently hold them for 2 or 3 years. And then the Bitcoin bull market of 2020 came along. Suddenly they were like, oh, actually, we're generating 40, 50, 60% of our sales to the Bitcoin miners or Bitcoin ASIC manufacturers. And that's
Okay.
quite high margin sales. And then there was a boost in profitability. So that's one key category, I guess, is the kind of semiconductor supply chain type companies in the Far East.
Okay.
Um,
So you actually spoke to some of them, and they told you at that time that like they have a huge percentage of their sales are actually to the Bitcoin miners already.
well, when I spoke to them, say in 2018, I didn't just speak to them. I often went on site visits. So went to
Uh,
Taiwan, and not just speak to the kind of the IR official, but I do a factory tour, speak to the engineers, the product design team, the sales team, management, and
wow.
then they would say, crypto and Bitcoin is a stupid idea. But then when the Bitcoin price goes up to, say, in 2020, when it was like $20,000, $30,000, a big kind of 10x increase from 2018, then
Yeah.
even in in their official quarterly earnings release, the analysts would ask them at the call, what percentage of your sales are to Bitcoin ASIC manufacturers, and they'd tell that, so you could get that information just by reading the transcripts. And actually, I think I went to TSMC with Arthur Hayes in 2017, and we went to their headquarters, and we gave like a speech like in their internal auditorium to the TSMC staff about Bitcoin, and they were very, very fascinated by it because they were getting these orders from Bitmain at the time. Where Bitmain would put,
and they're like, oh, why are these orders growing so fast?
Yeah. So they were very fascinated by it and by us, but at the same time, they didn't really necessarily want to listen to what we said. And they wanted to, trust their own judgment about Bitmain and about what percent of their kind of capacity to allocate to Bitmain at that time.
And how many chips were they selling to Bitmain, and how many do you think they sell now?
So yeah, there was a big boom. This is way back in the 2017 boom. So of course, prior to the 2017 rally, when Bitcoin hit $20,000 towards the end of the year, I would say the foundry space had zero interest in crypto, and there were not that many direct orders with the major foundries. But yeah, in 2017, towards the end of the year, Bitmain put in some very big orders. I think like up to $1 billion. So the demand is very volatile. But that went from being 0% of their sales to kind of like 2 to 5% in that 2017 cycle, and then it went down to kind of a low again of about under 1% before we got to the next cycle in 2020, where it goes up to that kind of 2 to 5% again. And of course now there's more foundries involved. So now you've got Samsung supplying the Bitcoin miners, Global Foundries and SMIC, as well as kind of TSMC.
Oh, really? So there's more foundries supplying the Bitcoin miners. So Samsung in South Korea, where are the other ones?
So the four major ones, Global Foundries, SMIC, and TSMC, have all produced chips for the Bitcoin miners. Some of them have failed and not made it into ASICs.
Wow.
Because
they just didn't get the quality, or the design was wrong?
Yeah, so there's a number of reasons why the tape out can fail, or why the end product doesn't work. And then I think the biggest one is that they're just not reliable enough. So companies have produced chips that are more efficient than Bitmain's, but then there's just a failure rate that
it's too high,
and then the customers get unhappy. But yeah, it's very risky, right? When you're designing one of these chips.
Yeah, it's huge. It's one of the most risky businesses you could be in, is taping out a new chip.
Exactly.
And does TSMC for taping out and getting their chips out to market?
Well, yeah, they're obviously. I think they're much more reliable when it comes to delivering a product for Apple or something than when it comes to Bitmain. I remember in 2018 there was a very famous fail where Bitmain have essentially lost the entire deposit for almost 500 million.
Wow. So I'm just curious, actually, where are the other two foundries? Because I've heard of Samsung in South Korea and I've heard of TSMC in Taiwan. You said there's 4. Where are the other 2?
Yeah, I guess there's SMIC, which is kind of Hong Kong Chinese owned, and Global Foundries, which I think has been acquired by the UAE government, or investment funds associated with the UAE government, I guess.
Where is that?
Where their foundries
the fourth one
are more distributed.
Oh, they're around.
But their ownership, is one of the investment funds affiliated with either Abu Dhabi or Dubai. I can't remember which.
That's funny. Why have I mean, not that I should have. I'm not a Samlines guy, but why are they very small volume? I mean, it must be TSMC is the like 60% market share. What is the market share breakout of those 4?
By volume, I don't think TSMC's share is that high, because remember, TSMC is much higher margin than its competitors.
I see.
The TSMC is like doing the new product. So like if the Apple iPhone have a new phone, they'll go to TSMC. If you've got the older phones or the chips that don't need to be that cutting edge, in a car or in other devices. So if you do raw volume by number of chips, TSMC's market share might be quite small. But if you do in terms of profit from producing chips, then TSMC's share is a lot higher, I guess.
Great. Okay. And and I guess do you hold all four of those in your fund?
No. So in the history, yeah, TSMC has always been a big, one of the larger holdings for my funds, but yeah, I don't own any of the other ones. I have had
Okay.
Samsung in the past, but don't currently have that.
I mean, Samsung holding the stock would be very diluted by all their strategies. I mean, washing machines all the way to
Exactly.
semiconductor.
And there's a lot of governance risk of the chairman being arrested or
Yeah.
whatever.
No, shoot. Yeah, when I actually did strategy work for IBM and we were doing all their data center work, and it was funny because it was like $200 million of their business, or maybe $300 million of their business, or 400 even was data centers. But if you look at the IBM stock, that wasn't even enough to be mentioned in their annual report because it was like, even though it's like $400 million, it's still like it's almost zero of their overall strategy. Cool. And so when we talked about this before, you mentioned or we noticed that there's this Farside ETF flow dashboard. Is that the same? Is that talking about other ETFs, or why don't you talk about what is the ETF flow dashboard?
Yeah, so the ETF flow dashboard just monitors the daily flow in and out of the Bitcoin spot ETFs in the United States,
Hmm.
and more recently the Ethereum ones. And it's
Okay.
got nothing to do with any Farside products. It's just kind of a dashboard because I think the launch in January 2024 of the Bitcoin ETFs was a very kind of big moment in the
Monumental.
space. And I knew how to track it, or I had an idea how to track those flows. And I knew
Hmm.
that other people in the Bitcoin space would struggle to find that data in a timely manner. So I just thought I'll make like a nice dashboard that will show to them. It auto tweets when those numbers come out. And yeah, I think it gets about 60, 70,000 hits every night when those flow numbers come
Hmm.
out in the night.
Well, I remember hearing your updates every day when it launched, and that became the center of like almost every discussion around the
Yeah,
space.
it's actually quite hard
So,
to do because I think it updates like every like 60 seconds. It like queries all the ETF provider websites, and then it queries other kind of third-party financial providers, aggregates that information, calculates a flow number, and then yeah, automatically tweets out and updates the kind of table and charts. So yeah, it took
oh,
me
you
it
coded
was
it all up like that.
the code it all up. It's probably the most ambitious kind of technical project I've done, but seems to have worked so far. So
That's fantastic. And what's your insight now of the ETFs? I mean, now how long has it been? It's been 6 months now, right?
yeah, so they launched on January the 11th, 2024. It's now yeah, the 2nd of September. So it's been yeah, it was almost 9 months. Yeah, I think I've always thought that these Bitcoin ETFs as a product would be very, very successful as ETFs. Um,
And they have been.
yeah, even if they, don't have a positive impact on Bitcoin, either the Bitcoin price or the Bitcoin space, I certainly think that they're likely to be very good products. So, like from the perspective of an ETF industry analyst, I think it's very exciting, and they're going to be, and they are very successful. They're just simply a better way of holding Bitcoin for many people than previously,
Yeah,
and they're much,
vast majority of
yeah,
people.
and they're much better than even the previous iteration of ETFs and European ETPs that existed before that. If you think about it,
Right.
they're lower fee. They've got very strong regulatory clarity, which the European ETPs don't have. They've got higher liquidity, tighter spreads, bigger brand names behind them. They've got like marketing budgets. You don't need to worry about like kind of securing your private keys and all that kind of stuff. It's all kind of outsourced at a very, very low fee.
Yep.
So I think a lot of that flow, I think there's been like 18 or 19 billion of net inflow into those ETFs. A lot of that is just
Wow.
existing Bitcoin holders just shifting their holdings from however they held it before into these very efficient, very competitive products.
So you think that there's a lot of Bitcoiners that were holding like holding their keys in their wallets, and they say, okay, I'm just going to shift to the ETF because it's easier to manage.
Yeah, absolutely. Either holding the keys themselves, or they were using, Coinbase or something like that,
Yeah. Hmm.
or they were just holding another European ETP. I think there's been about 800 million
Right.
outflow of Bitcoin European ETPs, and most of that's
Okay.
probably gone to the ETFs.
Because the
And even
fees and the volatility is too high on the ETPs.
Yeah, they've got higher fees, they've got higher tracking error, they've got weaker investor protection, lower liquidity. I mean, these. Firstly, the US is the center of like the global ETF industry, right?
Yeah, for sure.
Um, and also, Europe might be second, and Asia is very, very far behind. Not that many kind of Asian people buy ETFs or buy
No.
Asian listed ETFs. Anyway, they will just hold mutual funds and investment funds. When the ETF
Yeah.
revolution has really happened in the US, and that those providers, BlackRock, Fidelity, have a very strong kind of sales network and distribution in the US that's unrivaled by anything in kind of Europe or Asia. So yeah, that's why the US spot ETF approval was kind of so significant. Certainly from like an ETF industry perspective, anyway.
Any insights over the last quarter or two? Because I mean, obviously we've had capitulation with Bitcoin. It's had some high volatility moments. It went up to 70, what was it, 74, and then it went drop down to 49. Like, how does the ETFs, how have the ETFs reacted to all this? And like, are people, paper hands, and is there a lot of outflows every time it goes down? Like, what are the dynamics of the ETF now that Bitcoin is accessible? And
Yeah, it's difficult to say because, of course, one driver in the day-to-day of these flows is, of course, there's a lot of these like kind of large hedge funds that don't care about Bitcoin, but they're doing the basis trade. So what
yeah,
they're doing is using the ETFs as collateral with their prime broker to then go short the kind of CME Bitcoin futures. And if the CME Bitcoin futures could be, say, trading at a 12, 13% premium to the Bitcoin price, they sell
mhm,
that, hold the ETF, and then because of the arrangement they've got with the prime broker, it's almost risk-free. They can't be liquidated. Because if the
right,
Bitcoin price goes up, yes, they're losing money on their future, but then their collateral's going up. And if the Bitcoin price is going down, then yeah, their future's making money, offsetting the kind of loss on the ETF. So if you look at the CME open interest, I think that's quite a big number, maybe, multi-billions. And of
yes,
course, if there's positive sentiment on the Bitcoin price, then that basis rate can go up. Because the reason you can earn, 10 to 13% just by doing this is because there's a lot of other people out there that want to speculate on crypto by going long on the CME futures because they want that leverage, if they can get leverage.
if they're shorting the futures, um, does CME give them the funding rate like Deribit and the other ones, or
So yeah, these hedge funds probably aren't willing to use Deribit.
no? I didn't say. The
Yeah.
question wasn't about Deribit. It was more about does CME give the funding rate to the shorts?
It's not a funding rate; it's a basis rate. So CME
Ah,
doesn't
okay, I
have.
see.
It's not a perpetual swap, right? So there's
I see.
the
Okay.
perpetuals market, which is much bigger for the crypto native platforms, like Binance, OKX, Bybit, BitMEX, have a much bigger perpetuals market than they do a futures
Right.
market. The
I
difference is
see.
with Deribit's a bit different because Deribit is probably unique in that it's actually diversified between futures, options, and the perpetual. So I think maybe
Right.
Deribit's one of the largest futures places, but typically, yeah, the futures
Interesting.
are like 10 times smaller in open interest than the perpetual swap. And of course, the CME doesn't have a perp, it's only got the
Yep.
futures. So yeah,
I
you
got it.
can compare the Deribit futures rate to the CME kind of futures basis rate. And typically, yeah, you earn even more money on Deribit doing the basis trade than you do on the CME. But the CME is much lower risk, especially from the perspective of these kind of hedge funds. So
For sure.
the Citadels or Millennium or Schronfeld, whatever they're called, have these relationships with prime brokers that will
Yep.
allow them to use the Bitcoin ETFs as collateral for their kind of CME shorts. And it's not a funding rate like the perps, it's just like a
I got it.
basis rate. Yeah.
Okay. That's good insight. And so using the Jonathan Bier like a future first mind, where are the ETFs going? Like what are we going to see with the ETFs in the next year to 2 years? Like volume, size, impact, change. What's going to happen with ETFs for the Bitcoin ETFs? That is.
I think they should continue to grow. And I think, obviously, if you look at the history of the crypto space, there's been these big cycles of these massive price rallies and then kind of crashes. I think the ETFs will surprise some people to some extent in that they will continue to kind of slowly grow even during kind of these price crashes. So you could see, just hypothetically, like another kind of bull market, Bitcoin's going up to 100,000 or something, and then there's a crash, and some industry analysts and commentators will be surprised that even though the ETFs are holding up quite well, there's still a crash. I just think a lot of investors just will like that ETF model, and it's really perfect for what they want to achieve in crypto. So I think the ETFs will continue to be, successful.
What's the market cap of the ETFs right now?
I think they've had, the Bitcoin ETFs have probably had about, as a group, 18 billion of flow, and maybe the Bitcoin price on average has probably gone up. So maybe they're like kind of 25, 30 billion. I think they're about a million Bitcoin or something.
Wow.
So,
And what do you think they'll be this time, let's say end of next year?
I have no idea. I really don't know.
Is there major outflow? One more question before we move to the next thing. Is there major outflows every time there's a Bitcoin down, or is it that since they're all institutionals, there's really no adjustment in flows based on price so much?
Yeah, there's definitely on the day to day. There's if the Bitcoin price is down on a particular day, it's more likely that there's going to be outflows, and if the Bitcoin price is up, it's more likely there's going to be inflows. But yeah, it's not clear necessarily what one is causing the other. But yeah, I think that basis trading is definitely a significant factor driving the kind of day-to-day flow. Also, the Grayscale issue again, because I mean that's just having huge outflow. So that's had.
But that's been fixed, right? That's not. They've adjusted their fees now, and or have they?
They haven't adjusted. They've looked for both Ethereum and Bitcoin. They've done a kind of spin-off where they've taken 10% of the assets of their legacy high-fee now ETF, spun it off into like a Grayscale mini. So in the case of the Bitcoin, GBTC was the kind of 2.5% fee product that they lowered to 1.5% on conversion to an ETF. And then I think in July, they launched a new one with the ticker BTC, which is the Grayscale mini, put 10% of the GBTC asset into that. And that mini product has a competitive fee of just 15 bips, while the original product has a 1.5% fee. So that original product is still getting outflows, and the same is true for Ethereum. And obviously what they're trying to do is have a competitive product with a low fee to capture some of that outflow. But their Grayscale just doesn't have the distribution of a BlackRock or a Fidelity. So they're still net, they're still kind of having outflows despite their low fee spin-off products.
So I'd like to, let's shift gears a little bit. When we were, obviously we're in a lot of discussion groups together and we're friends for some time, but one of the things that you were quite active with is that you actually went to the whole Copa vs. Craig Wright trial. I think you were in the courtroom the whole time. Is that correct?
Yeah, it was a 6 weeks trial. I think I missed about 3 days of it. So yeah, I spent a lot of time in that courtroom as like a kind of full-time job with my laptop typing away. Yeah.
Yeah. Wow. So for the viewers, I mean, a lot of our viewers are not like full Bitcoiners. So why don't you give us why is it important? What were you doing there? And then like we can do some questions, but like just the background as though, to someone that's heard of Bitcoin but doesn't know the whole story. But what happened and why were you watching a court case in London with this guy, Craig Wright?
Yeah, it's quite a long story, I guess. So there's this guy, Craig Wright, who used to be in Australia. And in about 2015, he started appearing on some Bitcoin podcasts and kind of videos saying a few weird things, kind of indirectly implying that he might be Satoshi without saying it. And then in May 2016, he had this big kind of outing where he claimed to be Satoshi. There were a few people that supported his claims, such as at the time, very well-respected Bitcoin developer, Gavin Andreessen. And then he apparently claimed to have done a signing session where he signed a message in Gavin's presence with the Satoshi's key. And then at this point in May 2016, it caused a huge amount of uncertainty in the space. People were speculating what's going on. Gavin put out a statement saying he supports his claim. And then the next day or the same day, depending on your time zone, he put out a blog post, which was supposedly the proof that he was Satoshi, with a signature. However, that blog post was very confusing. There was no real statement saying that he was Satoshi signed by a Satoshi key. It was just a confusing mess. And
Right.
then that indicated to the overwhelming majority of the Bitcoin community that this isn't Satoshi and Craig is just a con man. So this is way back in May 2016.
Yeah.
Um,
Wow.
However,
Long
again,
story.
this was right in the heart of the block size war. So, there's a chapter on it in the book, The Block Size War. And basically, the small blockers all knew that Craig Wright was a con man. The large blockers were kind of split 50-50. Some thought he was a con man, some kind of believed his claim to some extent. So the result of this, in my opinion, was devastating for the large block camp because it really split them and really damaged their reputation. But anyway, yeah,
Right.
he kind of was, his reputation was mostly destroyed when he put out this ridiculous blog post in May 2016. But he kind of hung around. Then, he was a bit quiet for a period, and then he started coming back and making some noise. He had a company, N-Chain, based in London. There was speculation about kind of who's financing him. And he was getting very aggressive on Twitter into kind of like 2019, 2020, threatening people who said that, he was a fraud and that he wasn't Satoshi. And then
Yes.
he actually started taking some legal action. So there's Peter McCormack, who is a UK-based Bitcoin podcaster.
Yep. Good
Peter
friend.
McCormack was tweeting that I've also, attended some of those days in court. So yeah, Peter McCormack basically said that he was a fraud, maybe on Twitter. Craig sued him for defamation. There was a trial in that case. Basically, what happens in that trial is Craig kind of won because he sued him for defamation. Peter didn't put forward as part of his defense that Craig actually is a fraudster. But in the course of that trial, Craig submitted evidence that the judge considered was faked. So he faked evidence in that trial. The evidence he faked was basically, he said that his reputation was damaged because he was disinvited from kind of these tech conferences. But turns out the evidence he put forward was faked. He wasn't really disinvited from tech conferences. He actually submitted fake evidence. So the judge heavily criticized Craig for that and awarded, he instructed him to pay £1 in damages. So Peter had to pay Craig £1. Then at the same kind of time, Craig was suing Bitcoin developers for ridiculous
Wow.
reasons. Way back in March 2011, 80,000 Bitcoin was stolen from Mt. Gox, and it went to this one FeeX address. And then Craig, years later claims that these are Satoshi's coins and they're his coins, and the Bitcoin developers need to release a new version of Bitcoin that kind of confiscates those coins from wherever they are now, gives them to Craig because Craig is Satoshi and they're Satoshis. Obviously, it's ridiculously stupid, right? Because he's not Satoshi, but even if he was Satoshi, those aren't Satoshi's coins. They're coins that were stolen from Mt. Gox customers.
Right.
And also, yeah, the Bitcoin developers don't have the. If they did release such a client, nobody would run it because that would destroy the whole kind of premise of Bitcoin. But yeah, the developers eventually kind of got organized and funding to kind of defend themselves. So various individuals such as Jack Dorsey generously gave money. They formed various organizations, and then they countersued Craig. Craig was suing them for hundreds of billions of dollars, I think like 200 or 300 billion pounds in the UK, which is
Wow.
like 30% of the UK GDP or something ridiculous.
Yeah.
So yeah, there was all these like complicated interrelated trials about this, and then there was the judge. They consolidated like a lot of them, and then there was one big the identity trial, which is supposedly going to be the main one, which the High Court judge in the UK was going to establish an outcome on the main identity issue, namely whether Craig is Satoshi or not. And that happened, at the start of 2024 in London. It was a very long, kind of 6-week case. Craig was on the stand for, I think, 13 days.
Wow.
But there was also other very interesting witnesses, like Adam Back, Martin Malmy, who disclosed to the court all his kind of long email discussions with Satoshi.
Okay.
So that was very interesting because, we saw for the first time, the building and planning of Bitcoin in the kind of 2009 period and new material from Satoshi. So it's definitely, a lot of those things were very interesting, especially the kind of anti-Craig witnesses.
Hmm.
And then, Craig had.
Was there any sort of insight you saw on that, like the Malmi emails? Like, what did you discover in the courtroom that you didn't know before that's like particularly interesting?
I think a lot of it's very interesting in terms of, the support Satoshi was giving Malmi, like even financial support that, someone sent him cash in the mail to help cover the costs of like running the Bitcoin.org domain. And that was like anonymously sent. And like Satoshi's indicating, these are backers, this money's not from him. Maybe
Yeah.
Satoshi himself sent the cash in the mail to keep the Bitcoin, for the Bitcoin.org website up and pay those server fees and hosting fees, etc. I think that's very interesting.
It's amazing how absolutely like meticulous Satoshi was at remaining anonymous.
Yeah, it's incredible. And of course, nowadays you could just send Bitcoin if you wanted to try to be
Yeah.
anonymous. But back then you had to send cash in the mail.
But
So
he had the foresight to know that he needed to be anonymous and was like completely anonymous.
yeah, which is it's incredible.
And so did Malmi, what came out of Malmi's emails? Was there some sort of new insight about Satoshi to give us a clue at who he is?
Yeah, there was more stuff about how Satoshi, was taking a break from the project and stepping back. There was stuff about. It was just very interesting to see like how behind the scenes, how they were kind of planning it and treating it like a project and like discussing.
Hmm.
I think there was some stuff about Satoshi's vision for Bitcoin, but most of the stuff about Satoshi's vision for Bitcoin that he emailed Malmi was very similar in content to what Satoshi's public forum posts were and other public
Okay.
writings.
And how would you
But
summarize that for our non-Bitcoin viewers? What are the like the five main premises of his vision?
well, I mean, for example, he's compared Bitcoin to like, what if you could, like gold is like a shiny metal that people value, but what if there was another metal that wasn't gold? It was just very like bland or black or grey, but it had the feature that you could instantly send it across the internet to anyone in the world in kind of
Yeah.
arbitrary quantities. So I think, that's a very interesting way of putting it, and I think he said something similar, but not exactly the same to Malmi in those emails.
Nice. Nice.
So
And Malmi, who is Malmi?
I think he's a Finnish guy who was like the first, second Bitcoin developer behind Satoshi, who was kind of involved in the project in 2009.
Okay.
And he was, helping, administer the forum, administer the release of Bitcoin. So, there's a lot of back and forward with him and Satoshi about, the release schedule. We're
Yeah.
releasing Bitcoin 0.2.0, whatever. What date should we release it? Should we include this feature? Should we not include that feature? And then he's definitely back involved in Bitcoin today. So he goes to like conferences and stuff even
Nice.
today, I guess.
Did when he was on the stand, did he say that he ever spoke to Satoshi? Has anyone ever claimed that they've actually spoken to Satoshi, or has it only been text?
He claimed, he never spoke to him over, it was just
Telephone.
emails and DMs and forum messages. No one, as far as I know, has ever claimed to have spoken to him with an audio. No one credible. There's a lot of crazy claims out there that, no one like Malmi, Adam Back, etc., Zuko Wilcox, all these people that were speaking to Satoshi early on, they were all doing
Yeah.
it by email, IRC, I don't know, not even IRC, email, and the forum
Yeah.
DMs.
Do you have any speculation who you think Satoshi is, or what, or where he comes from?
Not really. I mean, what I would say is that, the speculation on who Satoshi is has been going on all the way, since the start of Bitcoin.
Since the beginning.
And it tends to be that the level of speculation, the quality of the speculation goes down over time.
Yes.
So I don't think it was a team of people. I think it was one person, just because, having the operational security
Yeah.
and keeping operational security is very difficult for a team.
Yeah.
And, people forget, right? Bitcoin, like every other invention, is just building on all the previous technology. So Satoshi was, standing on the shoulder of giants.
Yeah.
Hash functions were already invented, Merkle trees were already invented, the people were already trying to build electronic money systems with various ideas. Adam Back had already, kind of come up with this kind of hashing idea for a proof of work. So what
Yep.
Satoshi did, like other people that invented things, is combine existing inventions in a new, novel way. So you don't need to say that Satoshi was a team. Satoshi, I don't think, was a team. I think it was one individual, but of course he was using ideas and technology and systems built by others
Yeah.
and building on their ideas.
Of course. Yeah. Yeah.
Yeah.
Of course. Of course. So you don't have a name.
No, no, I don't. I think there's one person in the world that I know isn't Satoshi, and that's Craig Wright. Other than that,
Yeah. So if we're gonna go through and just like eliminate people one by one, we've gotten one completely eliminated.
yeah, exactly.
It's funny. That's funny. And now I guess you mentioned you had a chapter of that in your book, and your book was The Block Size War. I admit that I audiobook read it, but it was fantastic. Like just meticulous account of the story. Is that book still selling, and that you still get like comments in the book? And tell me about the book since.
Yeah, the book is still selling. It's still on Amazon.
Mm-hmm.
So yeah, the book is about the block size war, which happened from August 2015 to November 2017. That's the period that I kind of mark the war out in the book, and it was kind of a big kind of battle inside the Bitcoin community over, the main kind of obvious thing it was over is the block size limit. So the Bitcoin protocol or the clients you run at the time, it had a limit such that each block had to be 1 megabyte or less. And some people wanted to increase that, and it was a kind of a big war. Not only should that be increased and how much, but how does one change the rules of the protocol? Should the rules be kind of relatively flexible, which is kind of necessary if you're like kind of a startup or a business and you want to win customers? You need to be flexible and adapt. On the other hand, if it's kind of a money system, then the rules need to be really resilient, which is more of the kind of small block approach. So
Right.
What the war was about kind of morphed and changed in that period, and it's very much kind of like a diary of what I was doing at that time in that kind of 2 and a bit year period. And I was, very interested in the war and very keen to kind of go to key events all over the world, from like Canada, Italy, US, Hong Kong, Europe, and to kind of follow it as best as I can. But I definitely missed some key events. But it's basically the events of what I saw in the war, basically.
So you just reported on the stuff that you saw. You didn't like say, okay, I didn't go to this event and go get some accounts from other people.
Pretty much. So actually, it only took me 28 days from deciding to write the book to pressing publish on Amazon. So I was very prolific in terms of producing that book. It's because I kind of had all the ideas in my head, and I was worried that I'd kind of forget about it. And I was expecting my first child, a baby girl, so I thought I've got to get this out before she's born, when I might have less
Congratulations.
time. But it happened a lot faster. So I think she was born in the middle of May, but it published in March 2021. So I was very quick in getting it out. And I'm sure it misses things. It was just, I didn't do any extra kind of research for the book.
Right.
It was just
you didn't need to.
I already knew.
I mean, it was robust. I mean, for sure. I guess you're a writer, so you've been doing the BitMEX, you've been doing the analysis, writing, and everything for years, right? So this is, I guess, writing a book was new for you, but writing in general is kind of what you do, right?
I never thought that I'd be a writer. I think I'd always thought that I was going to be like a kind of investor/equity analyst. And I couldn't really write that much, but I guess, I was just so fascinated and enthralled by the Bitcoin space that I was able to just to write things that I wasn't able to do about any other topic, I guess.
Right. And the small blockers, so I guess in summary, you documented the war, or the discussion and the debate and the efforts to change the block size to bigger blocks so they could be faster transactions. And can you give us instead of about the book, but tell us about the war itself? How would you give the quick summary of what the war was?
Well, yeah, the war definitely changed over time. So I think at the start, in kind of August 2015, um, as Gavin Andreessen, as I mentioned before, was probably the most kind of respected Bitcoin developer, and he was working with Mike Hearn, and they released a client called Bitcoin XT to increase the block size. Um, and at that time, not that many people were that passionate about the issue. They just wanted to they liked Bitcoin and they just wanted to do whatever was best. They didn't really necessarily know the advantages and disadvantages of larger blocks or how to change the rules. Um, and at that time, not that many people were that passionate about the issue. They just wanted to they liked Bitcoin and they just wanted to do whatever was best. They didn't really necessarily know the advantages and disadvantages of larger blocks or how to change the rules. But there was a small set of developers. Some were very opposed to large blocks, and some kind of really wanted them. And no one thought this was going to be a major war that would go on for years. Everyone assumed that it would be over in a few months, and there'd be some kind of resolution. But yeah, it carried, especially the large blockers definitely thought that there would be a block size increase hard fork, and it would happen relatively quickly. And that was one of the mistakes that the large blockers made. Because most people thought there's going to be a hard fork block size increase. Certainly in 2015, it was just a question of how and when. But they didn't think that they needed to be that aggressive to secure that.
Right.
And because
they thought it would just get done.
And because of that, it allowed the small blockers to get their act together to a certain extent. Had the large blockers, had all the resources that they applied throughout all those years, had they, applied them all in 2015, they would have, I think, been able to win the war a lot more easily at the start. But they didn't know they had to expend that amount of effort. And then,
do you think that the right decision was made?
So my personal view, I think, on the block size war is I definitely agree with the small blocker view on that the consensus rules need to be very robust and difficult to change. And in that respect, I think a very good precedent was set that, nowadays it's very difficult to do a hard fork. Maybe it can't be done. And, a soft fork, again, we have to be very patient. It has to take a lot of time. We've got to build community consensus. I definitely agree with the small blockers on that. As for the actual site, what should the block size limit be? I'm more open-minded. I think, maybe the large blockers had a point there, and it's difficult to say.
Now they push through Taproot, and I think there's proposals to do covenants. Are you following that part as well, or is that outside of your purview?
Yeah, I'm following it a bit, but yeah, I guess exactly. So the big thing that happened in the block size war was SegWit activated, which essentially increased the block size limit from 1 megabyte to 4 megabytes. And then, of course, with Taproot, it's made a easier way to implement that so that people can use that 4 megabytes of space to, put images into the blockchain. And that wasn't the main objective of Taproot, but it allowed that. And I don't think that was a mistake of SegWit. If you look back at the history of SegWit, this is what people were saying. They were saying it allows 4 megabytes of space. Sure, you can fill that up with images or music or whatever. And that's what we're doing. We're increasing the block size to 4 megabytes. And if you fill that up with 4 megabytes of images, yes, that's taking up more space on the blockchain, but it means that you're creating fewer UTXOs. You have less signatures to verify, so actually it's maybe making running a full node easier than it otherwise would be. Because one of the things the small blockers were saying is that there's multiple ways of analyzing the resources it takes to run a node. You've got bandwidth, storage, the CPU of validating signatures and all that kind of stuff. So when we activated SegWit, one of the disadvantages was, yes, you can have 4 megabyte blocks and you've got to store those. But if you do have 4 megabyte blocks, that means you have fewer signatures to verify, and it makes it easier from that perspective. So,
interesting.
Yeah.
And do you have a take on the covenants like OpCat and the stuff coming up?
Yeah, I haven't been following it that closely, but
Hmm.
Yeah, so I think there's only been after SegWit, there was the Taproot soft fork, which is only
Yep.
one that's happened since 2017, and now, yeah, maybe we'll have a kind of OpCat soft fork, so that will be the second, and that's definitely the
Yeah.
kind of small block philosophy of maybe doing one soft fork every few years or something, and it's seen as a kind of
Yeah.
major event, a very rare event, and as for OpCat itself, I think it's, then
Well,
maybe that would be
apparently
a good thing to
Taproot
do.
is pretty robust. From what I understand, there was a lot of undocumented capabilities inside that upgrade. So there's been quite a few startups doing new stuff because of the Taproot.
Yeah, so there's been a lot of companies doing things, that are saying DeFi is coming to Bitcoin, um, and they want to use either the features that exist in Taproot or new features if the opcat opcode is activated. But they could have done this earlier, before these soft fork activations. Of course, we know way back in 2014. I'm sure you remember
Hmm.
Counterparty,
Yep.
um, where you had a lot of the features that are popular now on Ethereum, such as a DEX and issuing tokens. So the capability to do all this stuff on Bitcoin existed, way back in 2014 before these soft forks. It's just,
Yep.
um, these new activations might make it slightly more easy to implement or cheaper or more efficient
Hmm.
use of block space, I guess.
Definitely. So, I mean, that kind of leads us into the kind of like the space that you are like centralized in, which is the how does the Bitcoin get funded? Like, what is the funding landscape for Bitcoin devs? And I know you have a new initiative that you're doing with this grant program with Arthur. Tell us about what the landscape looks like.
Yeah, I think the funding landscape now is very strong in that there's like several organizations out there that fund Bitcoin developers to work full time doing open source Bitcoin code. So you've got Chain Code Labs in New York, you've got Brink
Hmm.
in London, which I'm on the board of.
Okay.
You've got OpenSats, which has given a lot of grants, and all these organizations have quite different philosophies. So, like Chain Code has an office in New York and requires the developers to go in and they like work together and collaborate. Brink has an office in London, and there's like 7 Bitcoin Core developers that go into the office and work together. OpenSats just gives people grants. There's no office. There's also Spiral, run by Steve Lee,
Hmm.
that's giving a lot of grants, both to kind of Bitcoin and Bitcoin Core, but also kind of all the kind of necessary side projects and Lightning, and alternative Lightning implementations. So there's definitely a lot of these organizations, and typically they have several millions of dollars on the balance sheet, so they're quite well
Right.
financed. And going back, I mean, just the history of it. So the first kind of people paid to work on Bitcoin was Gavin Andreessen, I think in
Hmm.
2012, by what was called the Bitcoin Foundation. And
Hmm.
then they had, I think, Corey Fields as well, was their kind of second developer that they paid. And that was just donations. People just gave the Bitcoin Foundation money. And then I guess MIT DCI started funding Bitcoin developers. Also, Blockstream, which was a venture-backed company, paid for a lot of
Adam.
Bitcoin developers. So it's kind of transitioned. And also at BitMEX in 2019, I launched the BitMEX grant program where we had the profits of BitMEX was used to fund around 5 Bitcoin developers. And then that was kind of quite pivotal because BitMEX did that and it proved to be quite successful, like boosting the brand of the company. Other exchanges copied that, notably OKX. So several kind of exchange companies helped fund Bitcoin development, and more recently, the ETFs as well. So VanEck and Bitwise have announced profit share agreements with some of these organizations that fund Bitcoin developers. So the industry as well is kind of giving back and helping do that.
Right.
Um, but yeah, so recently, the family office of Arthur Hayes and Maelstrom Fund announced a Bitcoin grant program that I'll be administering, and I've been interviewing a lot of candidates for that.
Yeah.
I think there's an open application process, so they can go to the maelstrom.fund website, fill in a
Hmm.
form, and then I interview the candidates, write up notes, and then email Arthur Hayes, who makes the final decisions on what grants to give.
Hmm.
So I'm very much doing that at the moment. So spending a lot
How
of
many have
time.
you guys given?
We haven't announced any grants yet, and in the coming
Okay.
weeks, we should be announcing some of the grants.
How many applications have you gotten?
Um, there was about 50 applications, um, and maybe about 25 of them were kind of good quality applications, I would say. And really, I mean,
And ha
there's a lot of organizations out there funding. So if are a Bitcoin developer with a good reputation, like working on Bitcoin Core, it should be fairly easy for you to get a grant from like
okay.
OpenSats or something. But what we're trying to do at Maelstrom, we are looking yet to finance some of those well-established Bitcoin developers, who are the top contributors, but also bring new people in so that the number of people working on Bitcoin Core increases. Because we need to professionalize that product, the project, so that
Yeah.
there's more full-time people. And if it's just kind of part-time people, there's a lot of complexities and nuances and history in that Bitcoin code base. And it's
Hmm.
very hard to kind of get people up to speed to understand that so that they can contribute going forward and like kind of understand that if you edit this code or you're fiddling with this thing here, which interferes with the game theory over there. So we need more developers that will make the project more resilient and more
Hmm.
censorship resistant. Especially developers in multiple jurisdictions. We don't want all developers in London or all developers in San Francisco.
Right.
We want them hopefully geographically diversified. So, there's a number of grants that Maelstrom will be making that are people, typically experienced software developers, who've worked in software engineering like 5, 10, 15 years and are new to Bitcoin. And hopefully they will have a mentor as well. So, Maelstrom is just a family office. We're not going to provide any support for them apart from cash, but we can find another more established Bitcoin developer who agrees to act as a mentor for someone that we're giving a grant to, and get an experienced software developer without much Bitcoin experience. After maybe 6 months to a year, then they will hopefully have enough knowledge and expertise to be a good contributor to the project. So that's one of the objectives, is to get new people involved.
Are all your grants going to be given to people that are full time, or are you accepting? I mean, like it sounds like that's kind of like one of the things you really want to push them to do
That's
is
one
be
of the
totally committed.
objectives, yeah. But I mean, we can be quite flexible, so we'll consider any application. But yeah, most of the ones we've given so far are for full time. But we're open to applications if someone's, I work at some crypto exchange as a wallet engineer, but I want to spend 20% of my time working on Bitcoin Core. We're also open to those applications, but we haven't yet given a grant.
So if let's give advice to someone that wants to do Bitcoin Core, a grant application to you. Like what should they do? What's the advice you have? Like how robust should the application be? How much time should they be dedicating? What part of it should they be doing? What kind of experience should they have?
Yeah, I would say that they need to have a lot of experience as a software engineer, not necessarily for Bitcoin, but it could be somewhere else. And they should be looking at the Bitcoin code base and asking questions to Bitcoin developers to try to understand it, trying to help them review code or review pull requests,
Hmm.
and be curious to kind of build up your understanding and politely ask questions, and then hopefully build a relationship with some of the main contributors to the project, so that when you submit your application, you can put them as a reference. And maybe even get them to agree to like mentor you.
Yeah.
And then, if you've got a very well-respected Bitcoin contributor agreeing to be your mentor, then you're likely to get a grant, I'd say.
So a lot of it is like, hey, I'm a super experienced software dev and I've gotten, like I have old known Bitcoin Core guys just kind of looking over my shoulder and helping me a little bit. And
Yeah,
then putting a proposal in.
yeah, exactly.
What has been the category of your favorite proposal so far?
Um,
Out of the 50, there's a favorite. What is that? What is the
yeah,
I mean,
I think I
what you
can't be
can tell us
safe.
at least.
I think because
Yeah.
we're due to announce things in the next 3 weeks. So it's all going to be open and transparent, but there's all
Yeah.
the news is embargoed, so I don't want to say that. I would say at BitMEX, it just turned out that a lot of the grantees were doing like mempool stuff.
Yeah.
So there was kind of a community there of them like talking to each other about that.
Yep.
My favorite thing is one of the grantees at the BitMEX program was doing a lot of kind of R&D and research, and they kind of invented a new idea. that could be kind of
which
applied to
was
Bitcoin. And then now at Maelstrom, someone's applied to kind of implement that idea. So I'm telling Arthur that's a lot of continuity of your kind of funding, Lena. You paid someone years ago to invent some idea to improve Bitcoin. Finally now, kind of 4 or 5 years later, it's potentially coming to fruition. If you fund this person now, then they will implement the idea that you originally, in 2019
approved.
paid someone to invent. So that's kind of my
Oh, that's
favorite, I
cool.
guess.
That's cool. That's very cool. And I guess this is and how many you said you're going to approve I think did you say 4 or 5 or 10? I can't remember. You said 25 were
Um,
good applications.
I'm not sure. So yeah, I mean Arthur has maybe changed his guidance to me by more recently, like increasing the number of people that he might approve. But
Okay.
so yeah, for now I'm just diligently reviewing the applications, interviewing them, writing up notes, sending them to
Nice.
Arthur, and then seeing what he does.
Seeing what happens.
Yeah,
But his idea is to keep this fund open for the next couple of years or for the foreseeable future and
I think so.
constantly.
Well, yeah, I think so. But I think there needs to be kind of seasons where I'm kind of working on this. So maybe the summer is a good time, where I'm spending a lot of hours doing this, and then we give grants, and then maybe I don't spend that much time doing anything, and then maybe like next year. That's how the BitMEX program worked. So I spent kind of July, August, September working many hours, interviewing people, getting the grants done, and then not doing that much. And I think that aligns with the kind of, for the younger applicants, it aligns with the academic year, when a new academic year starts in September. Um,
Right.
so I think it kind of works like that.
Do you think that there is a lot of correlation? Why is there a correlation with the academic year? It's just because you think academics have more time, or
Well, in terms of the younger people, when you leave university, you look for a job, I guess, to start in September. And then for some of the more kind of, I mean, there's different areas of grants. So there's like the full-time Bitcoin kind of maintainer work, doing the day-to-day work, keeping the network working. So managing the release of new clients, making sure the peer-to-peer network works as the way the internet architecture changes over time. So keeping that Bitcoin up to date with that new technology, as Mac updates, Windows updates, Linux updates, making sure the build process works, all that kind of
Mhm.
maintenance stuff. And then you've got like kind of R&D stuff, which is like examples could be what should the fee algorithm be in the Lightning Network, and that kind of
Right,
modeling. And those kind of people could be statisticians or computer scientists at university. And
right.
then it could be their kind of, they'll stay at university, plus they'll get funded to kind of do research into these kind of like longer term R&D academic questions. And it wouldn't get a full-time grant necessarily. And for those people, yeah, I guess starting in September is kind of convenient because that's kind of with their normal kind of academic year.
Sense. Makes sense at least. Definitely. Is there a feeling that Bitcoin is about to have a lot of changes coming soon, or what do you think of all this season two funding? Like, where do you stand on the, or what are your thoughts on ordinals and Bitcoin layer twos and Bitcoin layer one stuff? Like, what is your thought about all this kind of massive integration that it's starting to see?
Um, yeah, I would say, yeah, it's quite controversial, and you see a lot of people argue about it on Twitter. I think in
Yeah.
general, I'm positive on it because I would describe myself as a kind of on-chain fee maximalist. I think one of the biggest kind of metrics that we should look to achieve as a kind of metric of success is what is the US dollar value of on-chain transaction fees. And the higher that number is, the more popular Bitcoin is, and the more sustainable mining and security will be for the long term. So certainly
Right.
in kind of 2021, I think there was like $10 billion of on-chain fees for Ethereum. That certainly
Yeah.
made me very jealous of Ethereum's success. So from my perspective, you know, to the extent ordinals boost on-chain fees, I think that's fantastic. When people have different philosophies, so some people are very concerned with how easy it is to run a node, and they don't like all the block space, all the extra transactions that all these things cause, that makes it more expensive to run a node.
Hmm.
So I understand that concern, but yeah, my primary concern for Bitcoin's future is ensuring there's enough fees.
Right.
So because of that, I would say I'm more positive about these things. But yeah, I guess there is a kind of big bubble in the funding of these kind of Bitcoin layer 2 things, and entrepreneurs are raising money from VCs. And I've been speaking to a few of them, and And it's funny because a lot of them are coming over from Ethereum
Yeah.
and launching these things, and they're applying like technical considerations that only apply in Ethereum, or even in their pitches. So one of the CEOs was telling me that they were using Taproot to kind of store the like ZK proofs or whatever, and they were like, oh, it's only data, so it's only a blob, so the on-chain fees won't be that high. And I was like, yeah, because in Ethereum, of course, storing data is a lot cheaper than computations, whereas as Bitcoin,
Yes.
there's a fee for block weight. It doesn't matter whether it's a computation or just data. So they were just applying in their kind of investor presentation ideas from Ethereum that didn't apply in Bitcoin. So yeah, it's another kind of bubble, I guess. But I don't want it to be a bubble. I want these things to be successful. I personally won't be investing in like the ordinals or images, but if other people value them, good luck to them. I believe in kind of Austrian business cycle theory and like Mises, where each individual has their own utility function, and whatever they're prepared to pay is like the market price. And I don't want to like criticize people saying, if they value buying an image, then good luck to them, and that real economic value transferring is evidence of that.
Yeah.
And I shouldn't criticize them saying, "Oh, that's stupid" or whatever. That's.
But you're not a big fan of the ordinals.
I want it to be successful, but yeah, I'm not personally contributing to the demand for the images. I'm not, personally investing in them, I guess.
And what about the season 2, like all the layer 1.5, layer 2 integration stuff? You a fan of that stuff?
To some extent. I mean, I wrote on the BitMEX blog recently about Core DAO, which they say is kind of a layer 2, but maybe it's not. So it's interesting because it's got 5,000 Bitcoin locked inside of it, staking for the Core DAO chain. That is also kind of quasi merge mined with Bitcoin. And it's interesting because the staking of the Bitcoin, all you have to do is basically send Bitcoin to yourself using op check lot time verify. And in the op return, you put in some fields, which is like who's doing the staking and your staking address on the Core DAO chain. And for doing that, you earn like a 3.5% reward in these Core DAO tokens. So it's almost like a risk-free investment because there's no slashing risk, there's no risk of anything going wrong in the Core DAO chain because you're just literally sending Bitcoin from yourself to yourself with tagging it as staking when maybe it's not really staking. So yeah, I think that's interesting as a way to kind of something you could consider doing with your Bitcoin as a kind of way of getting risk-free-ish yield. Well, I haven't looked at that many other kind of layer twos, I guess.
Yeah, layer 2s are interesting because they don't, there's no real covenants, so you don't have a real way to do a true layer 2. It's like they're using these like signature schemes, and they're like kind of like call them trust minimized. But if the covenants come through, I think we're going to see a much bigger push. Actually, you don't even really need layer 2s. You can do a lot of stuff on layer 1. The other ones I notice is there's a lot more undocumented stuff in Taproot that people are able to do very interesting advanced stuff. So, my feeling is that Bitcoin is about to go through a renaissance in the next kind of 20 months where we see a lot of functionality coming out on Bitcoin that used to be on Ethereum with the same limitations that you mentioned. Like it's not the same exactly, but it is going to create a whole new realm for the kind of stuff that you guys are funding.
Yeah, I think with layer 2s, again, there's no really concise definition of a layer 2, right? So
no, for sure.
You could argue the BlackRock Bitcoin ETF IBIT is a layer 2, right? You put your Bitcoin, the Bitcoin's in the ETF, and you can start like trading it on the New York Stock Exchange or whatever, and that's kind of a layer 2, or even like money on deposit on Coinbase is a layer 2. So I think really to kind of be meaningful, you could argue it should be a blockchain, maybe like a layer 2 blockchain structure. And with those, the main problem is, of course, you can't really use non-custodial Bitcoin into a layer 2, which has kind of been one of the main kind of holy grail problems that have existed in the space for years. You have to do a trusted system, so like Blockstream's Liquid, where there's this 11 or 15 multi-sig basically that controls it, or even with Ethereum, right? You could argue Ethereum's a layer 2 Bitcoin because of WBTC, whereas that's fully custodial, either under BitGo or now maybe it's transferring to Just in the Sun.
Yeah.
And then most of the other ones have some kind of federation type blockstream liquid type system where it's like multi-signature. Yeah, you can build a layer 2 that's like merge mined with Bitcoin or shares some kind of consensus system, but actually having non-custodial Bitcoin into that layer 2 is very difficult and almost maybe it's impossible. I don't know. And if you could build that, that would be quite valuable. I guess Lightning is non-custodial. Is a non-custodial layer 2, but it's not another blockchain. So some people want it to be a blockchain structure, whereas Lightning is just
Yeah, I think that it's like, I guess the Lightning is considered kind of like a side chain. They don't really. It's kind of a weird. There's a weird dynamic where the Lightning people consider themselves not layer 2 people, but then the layer 2 people have a new structure. But and actually, I was on the board of Liquid, so I'm very familiar with Liquid. We did one of the first Liquid nodes when
you were
at our firm. Yeah, we were in the Federation. I was there.
Yeah,
so
we used to be in the Federation as well.
see, we were Federation. I was on the advised. Remember, we elected like 4 or 5 people on there was a membership board and a strategy board. So the team had put me on there originally. And I think it was a good exercise. It didn't quite work out. Maybe too decentralized, but now I think people are using that. Like a lot of people have used that federation concept that kind of they came up with and expanded it in really new and exciting ways. Apparently also I think there's a lot of people that are doing layer 1 stuff. So we use layer 1 to the layer 2 concept, like generally like frivolously, when in reality you don't need to, there's not going to be a lot of need to take things into a second chain. I think a big untapped concept is like this, like wrapped Bitcoin, the ability to have Bitcoin that's abstracted to one layer using collateral or, you'll know that when a real layer 2 or when a real layer 1.5 is built, when the real OG Bitcoiners are actually staking.
Yeah.
Because it's completely trustless and they're making returns on it.
Well, yeah, Core DAO is completely trustless, but then the disadvantage is you can't actually use your Bitcoin on the Core DAO chain.
Yes, exactly.
But yeah, I guess you've got Liquid, Rootstock, Stacks. I'm not sure who the other kind of big ones.
Yeah,
are.
Stacks is the of the tokens that are live from like the Bitcoin community. I think Stacks is like 60-70% of market share or market cap.
And of course, that was a kind of ICO approved by the SEC, so there's
no
much
problem.
less legal risk there.
Yeah, we have to. Hopefully, we see some changes in the U.S. What do you think is going to happen with this with Bitcoin in the U.S. in the next kind of 12 months?
In terms of the regulatory environment,
yeah,
I don't know. Of course, what we've seen over the last year has been sensational court victories for the crypto and Bitcoin space. That has been very, very positive for the space, like boosted the price, got the ETFs approved, because we've had this kind of hostility from some of the US financial regulators, such as the SEC and FinCEN and the Office for the Control of the Currency, whatever these organizations are called, clamping down on banks accepting crypto transactions and suing or going after like these exchanges and service providers. And the court victories which has demonstrated the kind of independent judiciary in the US, has been a huge boost to the space.
Yep.
And now, of course, we've got the elections, where I think, is the crypto pack the largest pack or maybe the second largest pack? I think it's got like $200 million. And also people are saying, the crypto constituency is very significant in a presidential election because the crypto fans are in like marginal states or whatever. But I guess the classic election cycle thing is, both parties pandered to it to some extent, and then once either the Democrats or the Republicans have won, then they will, of course, go back on their word and not care about the crypto space.
Well, it's amazing that two of the three like presidents
it's a huge set, but if you look back at the history of their platforms, do they keep their promises? I'm sure. I don't know if you remember Barack Obama in 2008, but everyone loved candidate presidential Obama and the promises he was making were extremely
He won a Peace
popular.
Prize because of his promises.
Yeah. So
it's true.
I don't
but
know
at least
how significant the pack is, because maybe that if that's got a big pool of money and that carries on going over after the election and the people still want that PAC money, then yeah, maybe that could be impactful. I don't know.
I hear that it's I talked to one person. They said basically whoever wins, it's going to be bullish. I know we hear this, everything's good for Bitcoin, but because if Trump wins, there's more likely to be positive regulation, and then if Harris wins, she's more likely to print a crap ton of money. So we get the money printers in full effect.
But yeah, I mean, of course, this is another divisive topic in the community, right? Where you've got some people who are like, well, Bitcoin is supposed to be anti-establishment. We're not supposed to kind of want the establishment to pass favorable legislation and get involved in lobbying. But on the other hand, of course, if you look back in the early history of Bitcoin, people were philosophizing and predicting some of these things. I mean, certainly Ross Ulbricht being, when he was arrested in 2013, you had people on the Bitcoin forum saying things, when the Bitcoin price is $100,000, then we're going to be so powerful, we're going to pay Congress to get him pardoned or whatever. So, it's so unbelievably, but those kind of predictions are looking more and more likely, of course, with President Trump. So people were predicting that in 2013. So it's not like... Well,
Trump and RFK both said that they would free Ross on day one, basically because of the campaign contributions.
Yeah, but I think Trump may have said that several years ago before his first
term. No, for sure. No, for sure. Nobody said that. Nobody said that they would.
His first term or something?
I think that he implied that he might be looking at Assange and Snowden, but I don't think he's ever mentioned the word Ross directly. He doesn't even know. I don't think he even knew who Ross was in the last election.
But now with who he is now, but he's still
but he because I was actually at the Bitcoin conference and we saw him live, and when he said that, when he said, well, actually, what got the biggest roar of applause was when he said he was going to fire Gary Gensler. He was like, when he's like, oh, I didn't know you like it that much, and then he said it again and got everybody going. It was really kind of funny, actually.
I think Gary Gensler as well is another example of kind of history repeating itself in a very funny way, because he was, of course, he's now chairman of the SEC, but I think maybe from like 2009 to like 2014, he was chairman of the Commodities Futures Trading Commission, which is the regulator of commodities and derivatives. And at that time, of course, there was a very active kind of gold trading community that traded on the price of gold. And one of the key narratives in that space was, Gary Gensler is, like corrupt, and he's rigging the gold price, and he's like protecting the large established financial institutions and not letting markets work. And they were having
same thing exactly.
And they were like saying, he's only doing this because he wants to be Treasury Secretary under Clinton and it's now like the cycle's repeating again, where it's
exactly the same.
Bugs, it's the crypto community who hate him. And even he had, so now, is there like Hester Pierce or something, who's one of the commissioners who's pro-crypto? So at the time, there was a like kind of gold commissioner of the CFTC, Bart Chilton, who was probably giving him grief the same way the pro-crypto commissioners are doing it now. So he's got the experience of not just the like the being against the kind of online community, but also having like commissioners who are sympathetic to their cause on the board as well.
Wow, that's really fun. So these are some stuff that we're going to have to revisit as time goes by. I think it's going to be an interesting play. Is there any topics or stuff that you wanted to talk about while we're still here that I didn't ask already, or
I don't think so. I think we've covered quite a lot.
Let's make sure we get all the details for your grant program and your fund and stuff like that, so we can put it in the show notes. Make sure that, and if you want to, I think we've already talked about all of your stuff, and I think it's been a great conversation. And I'm hoping you have a lot of success with all this stuff. It's been my pleasure, and I appreciate your time.
Yeah, I really appreciate it as well. Thanks so much for your time, and let's definitely chat again. So thanks so much.
So this is Jonathan Bier and Transform with Greg Carson, and we'll be signing off. Bye.